G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David, and what I love doing is people that I call best in breed coming on. And I've got a real conviction in my heart to bring on people that are top of their game. And I'll tell you why. It's because we only rise to the level of the standard of our team. So when you have inexperience, or when you have people that have not been through cycles, or people that smell of commission breath, that's what you will get. And I tell that to my team in turn. I tell that to a lot of our clients as well. We want to go to that next level, which is becoming 1% property investors, which is thinking like the 1% do and not doing what the rest of the pack does. So which is why I'm really pleased to introduce Simon Pressley from Propertyology. G'day back on, Simon. How you doing?
Very well, Aaron. Great to be back, mate. Good to talk to you again.
Mate, awesome. I really appreciate your time. And today's, so if you're not familiar with Simon Pressley's story, we're not going to go there today because we've already covered that in a previous episode. So I'm going to include a link there. What we're going to do today is get straight into Simon's 2024 predictions. Now, granted, we're recording this at the end of February. And so almost 2 years of the 2 months of this year has already kind of gone through us. But what I'm already seeing from your predictions that came out on the 31st of December is that we're already starting to see some of these come to fruition. And so I really want to kind of dive deep. We'll include a link to Simon's article as well. But someone would say there's a lot of detail that went into and research that has gone into this article. Take me through kind of how long it took you to put this together, data points that you've used as well, and we'll go into the nuts and bolts of it in a second.
Yeah, I'm look a couple of times a month. We do a fairly detailed research report that goes out, and there's all sorts of facts and figures in those different reports. But the end of year one, we always release it on New Year's Eve. Is our biggest report, probably our most read report, and I guess it's summarize even that we talk about during the year. Property markets, there are literally dozens and dozens of influences, Aaron, and sometimes there'll be one major thing that the public have interest in, or a bit of a trend that gets a lot of commentary. But now and always, there's as many as 60 different things that influence the property market. So our end of year report that talks about the outlook for the year ahead, it contains a big summary of, I could easily say we reckon X will happen in city Y, but I haven't really taught anybody by saying that. So by taking the time to say, well, here's a big chunk of those metrics, here's where they were last year, and here where they are now, and here's where we think they're heading. Then at the end of consuming all that, they've got education, they've got knowledge to go, wow, now I actually understand that, and that actually makes sense. So that's what we've done.
Awesome, mate. Thanks very much. So in here, I'm going to start with 2023. So we look back on the year that was 2023. Yep. 5 interest rate rises. Somewhere 8 to 10% nationally in capital growth on average. How do you explain that? Because 2023 was meant to be the year that we saw property prices fall from all the data and all the research that I did. And we'll go deeper. Inside there was the mortgage cliff, which was a blip.
Yeah.
Inside there was meant to be defaults and arrears through the roof, which we know didn't happen. And nor do we see a real shift in bank policy. So when you look at 2023, what were your thoughts and what were your insights of the year that was meant to be versus the year that was?
Sometimes it's helpful to look backwards, isn't it? Which is why you've asked that great question. So at the beginning of 2023, every single bank in this country and all the economists who have a high profile that love getting their name in the newspaper each day, all of them forecast a downturn for the 2023 calendar year of between 3% and 10%. So that's what they said effectively at the start of 2023. And if we bundle all of Australia's towns and cities up and said Australia was one big property market, which of course we know it's not, but if it was, Australian real estate grew by 9%-ish for that year. I'll say that again. It grew by 9%, which is an official boom. Anything over 8% in a year is a boom. So it grew by 9%, but all the so-called experts said a decline of -3 to 10. Now you can go back, you can put any year in your search engine and you can type in any name of these so-called experts, and the digital footprint will prove to anyone who's got any interest that these people are never remotely close. Even in the years when they forecast growth, the rate of growth that actually happens is usually about 3 times what they forecast at the start of the year. So So that was last year. Now, why did it do so well? Well, it didn't surprise us. So people can check for themselves what we said at the start of 2023. We said that when we summarised the fundamentals, we said normally these fundamentals produce a performance of around about 8%. Well, markets grew by 9.5%. So we weren't far off. Underlying it at the start of 2023, and again this year, Aaron, your all-time record low volume of properties listed for sale, not in all of Australia, but a lot of those 400 individual towns and cities still have an all-time record low. We still have the most stable labour market that anyone sort of younger than 55 years of age, which is just me. It's the most stable labour market we've ever seen. We've had our fastest rate of wage growth in a quarter of a century. So whilst every single day we can point to lots of doom and gloom commentary, when you actually look at the evidence and the things that had the biggest influence on asset values, which is people's homes, they are as good as anyone's seen. So people should not have been surprised about what happened in 2023. The only reason people were surprised is because 99.9% of people who commented said that they predicted a downturn. That's the only surprise. But should they be surprised that those people got it wrong? Well, they get it wrong every year. But if you actually formed your own opinion, as we do, by ignoring what everyone else says and focus on what do the core statistics say and what are the trends for each of those key things, no one should be surprised.
Yeah, thanks very much. Do you feel it has part to do maybe what we call like the confirmation bias? So people looking for reasons to say that the market's going down, or people like you and I that are going, hey, mate, we do enough people that are making decisions and taking action that we only see that the market is going to continue to have that upward trajectory as well?
It's a great question. I'm not a psychologist, but I do have a keen interest in human behaviour.
Yeah.
And every qualified psychiatrist in the world will say that it is scientific proof that humans have what they call a default bias.
Mm.
So a confirmation bias is more something that we want. Something, like we all want our own hometown to do well as a property market. We all want our footy team to do well. And so we'll tell you why it will do well. That's a confirmation bias, right? But a negative default bias is actually scientifically proven that humans gravitate towards worst case situations. And the way it's been explained to me is we have this infatuation with fear and uncertainty. And the journos of the world and the marketing people of the world, not just in property, in life in general, they know that that's scientifically true. So therefore, that's what leads the headline. Whether it's whatever they're talking about, including property. Let's talk up the fear. Let's talk about the mortgage cliff. Let's get everyone worried about that, and let's see if we can milk that for 12 or 18 months. And then people believe that, right? Because everyone's talking about it, and the so-called news is saying it's going to happen. And everyone they talk to, their accountants and the economists and the banks are saying it's going to happen, so they all believe it. But every single year there's something like that. When COVID happened, what was it? No population growth. It's doom and gloom. Had the second biggest boom in Australia's history. Interest rates rising, doom and gloom. No one's going to be able to afford their mortgages. Everyone's going to be leaving the street. Didn't happen. Mortgage cliffs. Didn't happen. I think the next thing, it'll start this year, Aaron, will be rising unemployment rates. Well, effectively, if you want a job, everyone's got a job right now. There's only one way it can go up, and any unemployment rate below about 5.5 is a really good economy, right? We've currently got an unemployment rate of 4%. And I think, logically, they will progressively trend up. But because it's trending up, it'll be doom and gloom. All these people lost jobs. No, we've got a really strong economy and the unemployment rate's trending more back towards normal.
I hear. And I look at, and not that this is a barometer at all, but it's kind of a good way to see what eyeballs are doing. But on YouTube, you'll look at the videos that are going, property's a bad asset, this is the worst time to buy, and you're getting 15, 20,000 views in a couple of days. I'm like, whoa. Yeah. And then you look at all the reasons that, why this is a great time to buy, and they've got like a handful of views. And I feel like just that gravity and misery loves company. And so you look at that and it's like the bad news just becomes like a magnet for people, whereas the eternal optimists like you and I and so many other people in the industry going, no, buying is a real mindset, whereas people like to go, I'm looking for all the reasons to not do something, or why the sky's falling on their heads as well.
Yeah. Look, we know that So if we bundle up the 8 capital cities right here today and said, this is what they call the combined capital city median house price today, $1,025,000 is a standard. It could be a luxury home, a standard, what I call a meat and potatoes home in a capital city somewhere in Australia, $1,025,000. This time, exactly 50 years ago, 1974, the value of that standard house in a capital city somewhere was $25,000. So we've gone from $25,000 to $1,025,000 in exactly 50 years. Over that 50 years, we've had 5 recessions, we've had a GFC, we've had tech crashes, we've had stock market crashes, we've had all sorts of taxes, we've had all sorts of political turmoil, we've had wars all around the world, we've had natural disasters, we've had several times when interest rates have gone through the roof, we've had 2 decades where inflation was at about 10% for two decades. Like, property is the most resilient asset on the planet.
Without a doubt. Without a doubt, and there's an awesome graph. So all these graphs I'll include in our show notes and a link to your article. But that chart where you just go back since 1970 to now, and you overlay the standard variable rate, the inflation figures, and then what the house prices did on average, it makes for a compelling read. Just going, this property market, the GFC was a blip really in property prices. And if the GFC and the pandemic didn't do much to hurt home prices, what is it going to take? And the only times that I've truly seen property prices really stagnate is off the back of changes in bank policy. And you probably cast your mind back to the interest only changes. It got harder to get a loan with all the living expenses, interest only caps, for example. It really took the heat out of the market. And that's what, APRA wanted. That's what the banks were trying to enforce as well. That was really the only time, and it probably got harder. I wasn't lending in the GFC. I was in finance though, and the other time to get a loan was harder was in the GFC. So they're really the only 2 times that we've seen house prices kind of nudge or stall or fall a little bit off the back of changes in bank policy. What are your thoughts when you look at, I guess, the history and then what that means for the future as well?
Yeah, and I love Australian history at large, and then specifically real estate history, and I can promise you I've studied it to the absolute nth degree. I love it. But it's not to say that property prices aren't capable of going backwards or they haven't gone backwards. Of course they have, but they don't go backwards very often. And when they do go backwards, it tends to not last much longer than about 12 or 18 months. Now, when you're living in that moment, and especially in the digital world, that, unfortunately will be with us forever now, it feels a lot more intense than what it really is. Yeah. But it doesn't tend to last very long. But what is important is you can learn from history. You can gain a lot from history. But even in those moments, and we're nowhere near one now, in my opinion, of a mild downturn in different parts of Australia. But even when you're in those moments, take confidence that housing is an essential commodity, second to only water and food. It's the most essential thing. We don't have enough of it. We never will have enough of it. We'll always need it. And even if you have a property asset somewhere that loses 5 or 6% in a 12-month period of time, when you look back over blocks of 10, 20 years, you go, oh my God, I remember that year there where I lost a bit of value. Or I remember that 3-year period where from the start to the end of that 3-year period, my property value didn't change. I remember that. But wow, look at what it was worth at the start of that 10-year period and look at what it's worth now. Take confidence out of that if you're listening to this interview and contemplating upgrading your home or becoming a first home buyer, becoming a property investor. Ignore the negative noise because it will always be there.
Yeah, awesome. Thank you very much. Now, your article, I think the graphic, from a image perspective, it nails it. So again, I want to draw people back to the article, but you've got a royal flush here for capital growth. And so let's go through it. You've got household equity, you've got wage growth, tight supply, and then the joker card, you've got income tax cuts, which I want to talk about as well, which when you've done the data, stage 3 tax cuts are going to put $20 billion back into Australian back pockets. That is significant. And what it does for people's borrowing capacities, which we've worked out, is incredible too. So take me through, when you've been putting this research together, let's just go through each of those different topics. So household equity, wage growth, tight supply, and then the tax cuts as well.
Yeah, I guess so. All we've done there is we're conscious that I'm a data nerd. I'm a personality that loves detail and love being thorough. So the report had, lists, I can't remember now, Aaron, 30 metrics, right? And people with personalities like you and I will love that stuff, but not everyone's like us. So I sort of thought, for people who just want to go straight to chase, like, let's simplify it to a few key things. So the household equity is a key thing. Most people who buy property in a given year is someone who already owns a property, whether they're, buying their family home or investment property, they already own a property. Well, depending in which city they live in, their equity today compared to, say, 5 years ago, is somewhere between 30 and 70% more. That's a lot. That means they've got capacity to do something. So that's why that's one of the, key big pillars. Wage growth. Why have we put that there? Well, because all the commentary's been about the negative side of the profit loss statement, the interest rates and the inflation, and not enough credit has been given to wages have grown in a lot of people's cases significantly. There are lots of people who'll be listening to this interview and be going, yeah, actually, now that you mention it, my wage today is 10% more than what it was just 2 years ago, right? I think it's likely, without pretending to have a crystal ball here, I think it's likely that by the end of the year, interest rates will be lower then than what they are now. So I think it's absolutely certain that wages will continue to grow and possibly quite significantly again in 2024. So more money in the household pocket, but I think the interest rates by the end of the year will be lower than what they were at the start of the year. So even without earning any more money, you've actually got more money. In the inflation trend, what peaked at in December 2022, and if you have a look at one of the graphics in our report, it's been a sharp reduction and a consistent reduction. And then the last one is the tax cuts. Now, not the first time politicians have looked us all in the eye and just blatantly lied with how the federal government did a backflip on the stage 3 tax cuts. But even though the way they're executing the tax cuts is different to what 32 promises apparently they made, it still is, as I said, like $20 billion extra that collectively 27 million Australians are going to have. And what do humans do with money? They spend it. So, so or in your case, helping someone approve a loan, even without earning an extra dollar, when these tax cuts become implemented, it's only 4 months away. And so even without their wage going up, their borrowing capacity has increased because the amount of tax they pay has reduced. So, simplistically, they're the key pillars as to why 2024, all things being equal, will be a better year for property markets than 2023, which was a boom.
Right. Do you feel like it's almost like the first-time buyer grants, as soon as you kind of introduce that, it inflates property prices a little bit. Do you feel like, and again, we see it because we're very close to the property market, that it's already kind of getting built into future property prices, that's baked in that they're going to grow in value just because people have more money to spend potentially on property as well?
Do I feel what's been baked in? Sorry,
Do you feel like the property price is already starting to lift off the back of this confidence that we're getting with the extra cash that's coming into the economy?
No, look, I mean, at its core, whilst there are literally dozens of things that influence property prices, at its core, what it comes down to is how many active buyers are there in a chosen town or city on a given day. It's that, metric number one, and comparing that to how many properties are available to purchase. Not how many properties are built or how many properties are in that city that people are living in. If it's not for sale, you can't buy it. So it's a relationship between that. Property markets have started strongly in 2024 because we're seeing a consistent increase in the number of buyers, and we're not seeing really any, with the exception of perhaps Sydney and Melbourne, a couple other locations, we're not really seeing any increase in the number of properties for sale, and I don't think we're going to see much of an increase in that supply metrics for quite some time.
Yeah, cool. Thanks very much. Going through your report as well, there was one line in there that says, and I'm going to pull this out. So you say there's one capital city and numerous regional townships that will produce an average of 13 to 20% capital growth in 2024. you just elaborate a little bit? You can obviously see that I'm trying to ask, what are we seeing and where are you seeing this economic driver in the country really kind of leading from the front?
Yeah, so obviously we've only got 8 capital cities, but we've got more than 400 individual regional townships. Some of those are really big, some are medium-sized, some are small. But of the 8 capital cities, Perth is the market that we feel very confident will perform the best in 2024. And give or take, a couple of percentage points here, Aaron. I won't be surprised at all if Perth produces 15%. Growth this year, or if we put a range on it for people, somewhere between maybe 13 and 18%, which is spectacular, well overdue for Perth. That said, whilst that's a very exciting outlook for anyone who's already got real estate in Perth, we've been on record many times over the years, it's not a market that we would consider investing in, because even though it's a big capital city, understanding defining risk in markets and minimising the risk for investors. Perth's economy is nowhere near as economically diverse as many other parts of Australia. There are lots of regional locations that are significantly more diverse than Perth's economy and therefore represent a lower risk, but they have still great capital growth potential.
That's interesting, because that's what I could almost connect the dots when I was reading it. And then, later in your report, you say Perth's economic profile does not satisfy the non-negotiable criteria set for propertyology investor clients, which is an interesting shift, because you're going, we know there's growth there, but we're actually not going to advise our clients to buy there. We're not recommending it. Can you take me through what strikes Perth out of the equation or the criteria for you guys, mate?
Yeah, so it's not saying that it will perform badly or that they're people need to be fearful. And I guess it's when you asked me the question earlier about history and learning from history. Risk is an interesting thing, and it's not just, risk is relevant for everything in life, isn't it? Including property. But there is a big, big difference between a perceived risk, which is one human individual's perception, and that's it, and a real risk. And real risk is something that can be quantified, where we can point to evidence and saying, here's a big, big bunch of evidence to say these characteristics actually represent a bigger risk than something else. Now, specific to property, the three biggest risks in this order. First is the size of the mortgage, where the median house price is a lot higher than other parts of Australia. The mortgages need to be higher to support the purchase of those assets. And, in periods of, for example, really sharp rising interest rates, or in really weak local economies of an individual town or city that's got a high mortgage, you can see a big reduction in asset values for a climate like that. But the second one is economic diversity. So at a really example for your listeners, think of a one industry mining town that's had a period of a spectacular property boom and then a period of a spectacular property decline. It's actually not mining that caused that, it's job creation and job loss that caused that. Jobs have the biggest influence on property markets of an individual town or city. So where you've got an individual town or city, whether it's got 50,000 people or 5 million people, really doesn't matter. Is there an over concentration of jobs in any one sector, not just mining? If the answer is yes, then not if, but when that one key industry has a period of several years of it struggling, then there's a big segment of jobs in that town or city that become fragile. So Perth is not a mining town, but a very, very large portion of Perth's economy hinges on the success year in, year out of the state's mining sector. And this is why we've done a case study report on Perth about 12 months ago, and we put the spotlight on a 14-year period of time, 2006 to 2020. Over that 14-year period of time, the median house price was the same in 2006 as 2020. Could you imagine, as a property investor, buying an asset in 2006 and 14 years later it's worth the same as what you paid for it? Perth's a capital city. Perth's the 4th biggest city in Australia. Over that 14 years, it had the highest population growth in the country, but yet its property values did not change over that 14 years. Why? Because not all that 14 years, but a big chunk of it, but about 6 or 7 years, the mining industry really struggled. Now, when will the mining industry struggle next? I don't know.
Yeah.
No one knows that, right? But does Perth have an unhealthy reliance on it? It does. So that's why it's a defined risk, and part of our job as responsible property investors is to avoid risks that don't need to be taken for our clients.
Yeah. Okay. All right. Cool. So, what's some of the regionals when you're looking at some of the regional towns? Again, I don't need, obviously this is when clients engage you, they get access to that data. But what's some of the regionals that you're looking at? What's attracting you? What's driving you to invest in those townships? Simon?
Yeah, great question. And it really doesn't matter to us whether a location is a capital city or a region, because those two things, they're just terms. What is essential is the individual town or city first must have a diverse economy, whether it's a region or a capital. Second, it must have, relative to the rest of Australia, it must have affordable housing. We'll only ever buy a detached house. There must be a big body of evidence at our disposal that give us a lot of confidence in the economy of that town or city in the years ahead, improving significantly. That's the housing demand piece. So property markets is all it's an exercise in understanding outlooks for local economies. That's the gold information. And the fourth piece is a controlled housing supply pipeline. So that's pipeline is a key word there. So we're talking about not just what's the current level of housing supply, but it's the stuff you can't see if you're in that town because it hasn't been built yet, but things have been built for approval. So look, in no particular order, the world's our oyster with Australia. The far north of Australia, if I start there, places like Townsville and Cairns have an exciting outlook. Further down the coast, central Queensland, places like Hervey Bay and Bundaberg. Inland Queensland, Toowoomba has a good outlook. In New South Wales, it's more inland locations than coastal locations. So I'm referring to places like Dubbo, I'm referring to places like Wagga, Armidale, Tamworth, Albury Wodonga, the border city there has a good outlook. Victoria is a no-go zone for us. We've been doing this for more than 15 years, and never in our existence have we put a blanket boycott across the whole state. We've put a blanket boycott on investing anywhere in the state of Victoria because of significant concerns of the future, and I'm talking maybe as long as a decade, of the Victorian state economy.
So I'm just going to stop you there. So you said you got a blanket ban on Victoria, which for yourselves, it's unprecedented. I heard Bernard Salt speak recently, and as a demographer, he's saying over the next 10 years, Melbourne's population is expected to exceed Sydney's. And so when you're saying, oh, we don't have a favorable outlook, take me through that, because it feels like that's your view of the world is very different to someone like a demographer's is different to, I guess, what people are seeing on the ground.
Yeah, well, demographer's not a property market analyst, but that doesn't mean I don't have some respect for Bernard Salt. But what Melbourne's population is now, next year, 10 years, 15 years, 20 years, no one knows. And frankly, I don't care. And that might surprise people to hear that, to sort of say, geez, a property market expert doesn't care about a city's individual population. No, I don't. I honestly don't, because it's despite what people believe, population growth has a very, very small influence on property markets. COVID should have taught people that. We had 2 years where Australia's population did not move. The lowest population growth this country has seen in more than 100 years, since World War I, and yet we had the second biggest property boom in 200 years. So we're talking earlier about Perth, the highest population growth in Australia over a 14-year period of time, and the median house price hasn't changed from the start to finish that 14-year period of time. So we honestly don't care about what an individual town or city's population size might be at a future point in time. Our primary focus is on what are the decisions that are being made from all different sectors of the economy, federal, state, local, all the different industries. Collectively, what are all the decisions that have been made in recent times, and how are those decisions going to unfold and influence the economy of a town or a city or an individual state? And also, what are the financial resources available? So Victoria has an enormous amount of state debt. It was already big before COVID, and it went through the absolute roof coming out of COVID. And what we're already seeing last year was the introduction of quite a few large and nasty taxes. That's a sign of a state that has an enormous debt and has to raise revenue at a rapid rate. When you've got that lack of resources, you are depleted in a state's ability to for economic expansion, and it's economic expansion that creates jobs and builds infrastructure and all that sort of stuff, which directly feeds in the property markets. The same government scrapped, embarrassed, global embarrassment by walking away from the Commonwealth Games that it had committed, to hosting. So there's a number of infrastructure projects that it's already scrapped. So these are key signs, as well as what the evidence says, what their balance sheet says, of not having a healthy outlook. And their attitude towards investors is disgusting. So we would be reckless as a business if we suggested that someone put an amount of capital into a toxic environment like that. Not what Victorians want to hear, and certainly I don't have any pleasure saying that because I'm a Victorian investor myself. But what's important as an investor is to always remove your own bias and make an objective assessment of things, because markets don't have bias. Markets do what the fundamentals dictate they will do. And when we look at Victoria objectively, it's uninspiring. Now, that's not to say to people, you should be fearful, the value of your assets are going to decline. I haven't said that. What I am saying is referencing the potential for the state of Victoria's property markets against the other, 6 states and territories. It's nowhere near as good.
Yeah. Okay. Really interesting. Thank you very much. I'll round out with just one last question, and your outlook comes out to the final piece of the puzzle, which is the unknowns. And so this is what we know what we don't know. And so the unknowns talks about interest rates, and everyone that's kind of talking about or speculating what interest rates is going to do is pure match that. It's pure speculation. There's no crystal ball. I mean, we know that because the RBA said, we're not going to raise rates till 2024, and here we had 13 rate rises shortly after. So there's there's an element of distrust that I have here, and another one that you said here is taxes, and we talk about element of distrust.
Yeah.
And I don't really want to get into it. There's talks about negative gearing changes. It's too early to kind of even say, and we don't even want to kind of stir the pot here. But again, it's unknown. Yeah. So what gets done there could impact negatively as well. And the other one here is around like Airbnb and the impact of China, oil prices. So you can see really macro what potentially could impact the property market as well. So take me through when you kind of round out and you go, here's some of the macro, nice to know, but if you kind of get caught up in it, you might be caught up in headwinds, things that you cannot control too. So take me through some of what you've put together there.
Yeah, so the reason we like to include that section titled "The Unknowns" in our report is because every single year there are things that, when we get to the end of the year and we look back at, what are the things that actually had an influence. There's always things that actually occurred during the year that no human could have possibly foreseen at the start of the year. But what we also know is that it's very, very rare for any year to have things that have a major influence. So, could someone have predicted in the middle of 2019 that in just 6 months, the world's going to start a global health pandemic? Like, no, right? But how often, does that happen? Well, not very often. How often is there's wars every year, but how often is there an enormous war that has a huge impact? Well, for Australia, that hasn't happened since World War II. But interest rates in 2022 was probably over the last decade. 2022, it wasn't just that interest rates went up, and as you rightly said, the RBA was saying in the very first month of 2022, no, we can't see us increasing them, in any hurry. It wasn't that they went up; it was how much they went up by, right? So my general suggestion to your listeners is, don't worry about those big, what we call blue moon moments, because they don't happen very often. Focus your attention on the collective sum of all the fundamentals that we've been discussing today or in our report. But knowing that there will be some things that will unfold and they'll get negative attention at the time, but in the overall scheme of things, they won't have a huge influence. I think the biggest unknown is, what will inflation really do?
Yeah.
The RBA don't know, so don't waste any of your own energy trying to guess it. What we can
Everyone's
do is
everyone's an inflation expert at the moment, aren't they?
absolutely, and like you read a report, from an expert on inflation one day, and he says, oh, it's going to do X, and the next day a different expert's got a completely different opinion. So
Yeah.
don't worry about that stuff. What I do with inflation is to go, well, what influences it? And there's a range of things that influence. What's actually happening with those external things that influence it? They're actually improving. And when you look at the trend, when you stand back from what happened with inflation last month, and when you stand back and go, well, where did it get to? 6-7%, whatever. What's it progressively been doing? Consistently been doing? Trending down? Is it likely to do that? I think absolutely it's likely to do that. How does that affect property markets? Well, inflation doesn't really affect property markets. But the rate of reduction of inflation will have a big influence on what the RBA does.
Yeah.
Some unknowns, what will happen in terms of volume of new construction. There are some, I think the material constraints are improving there. The labour supply is an issue. Bureaucracy and building regulations is a delay. But that puts upward pressure on property prices. Taxes is probably the next biggest unknown. Will different states, will the federal government introduce new taxes? Personally, I'm not worried about negative gearing. It seems to be one of those topics that pops up every couple of years. What I do know about negative gearing is that it's been in existence for more than 130 years. More than 130 years. And it's highly unlikely that it will be touched, but people will always speculate it. And negative gearing is not a property market force, it's a tax policy.
Beautiful. I love exactly what you're saying here. And a lot of it is you can get caught up in, and I see it all the time, people call analysis paralysis, people get caught up in the rhetoric or the fear mongering or the media headlines, for example. And there's people that you and I meet every day that are taking action, that are making decisions to move forward with their life, irrespective of what is the external noise that's going on, whether that's friends in their circle saying this is not the right time to be buying or wouldn't be buying there. Plenty of experts at a barbecue, and then there's people like you and I that, professionals that they are engaging, going, hey, we do this daily. We're seeing people and what they're doing. How do we help enable you to make good, confident property decisions that's going to benefit you and your family in the future?
Absolutely. I mean, no human ever needs to look hard if you want an excuse to do nothing or to put something else. Like if that's the way you're wired, you will always do that. There will be different things that you will point to in different years, but you will always find those things to justify your reason to put your hands in your pocket. And that's sad for people who are that way. The statistic we were talking about earlier, 1974, combined capital city median house price, $25,000. 50 years later, $1,025,000, right? How many times did people put their hands in their pocket and I'm fearful of this and I'm fearful of that, and look at what they missed out on? So the best time to invest in your future, no matter who you are listening to this, is always as soon as you can afford to. Always. If you can afford to invest in it now, do it now.
That's exactly it. And I'll leave it there. Simon, what I really respect about you is, yes, you've got an opinion and you're not afraid to share that opinion because it comes with a level of conviction, right? And there's a lot to respect about that. But it's also, you've put this on the record. It's date stamped, 31st December, 2023. Here's what I'm predicting. And I've seen the predictions and what you've done over time and how they've come to fruition. It's like, there is a track record here of going, what we're doing is data-driven, followed by insights, followed by taking action on what we're seeing here. And I think the 2024 property outlook, I'm going to get you back at the end of the year or early next year. And it's like, let's really see, let's go deep and see how it's really performed. Because I'm very, very eager to see how this
do the report card, Aaron, at the end of the year. That's a good idea.
Awesome. Hey, Simon, I want to say thank you so much for your time, your energy as always, mate. If people want to connect with the team at Propertyology, we'll include details as well. Like with everyone that we bring onto our show, we want to say, look, if you align to the values, you align to the message, reach out, have a chat, because you just don't know what door that will open for yourself personally and professionally and your property journey as well. So, Simon, big ups. Thank you so much. That's a wrap for another episode of the Australian Property Investment Podcast. If you love us, leave us a review or even tell a friend. Don't keep it a secret. Tell a friend and share the knowledge and spread the love.